TJX Companies, which is home to businesses like TJ Maxx, is trading near its 52-week high. In this video, I'm going to evaluate the business, look at the current and longer-term risks, look at valuation using my proprietary discounted cash flow valuation model and the forward price to earnings ratio, and I'll evaluate the business profitability using the operating profit margin and the return on investor capital. I'll incorporate all of that to give you my recommendation, my rating on the stock, whether it's a buy, hold, or a sell at current market prices. Let's start with the risk evaluation.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first risk I'm going to highlight is macroeconomic sensitivity and consumer spending. So persistent inflation and high interest rates have led to decreased consumer spending on discretionary items, which is affecting TJX's sales. Unfortunately, that situation is likely to get worse. The tariffs that the U.S. President Donald Trump placed on the United States' trading partners is likely to create higher prices for consumers on everyday essentials and discretionary items. So people's budgets are already under pressure, and that's going to become even worse with the tariffs. So the tariff impact will, first of all, increase prices for U.S. consumers, and then maybe later on down the road, it might create an increase in manufacturing activity and an increase in jobs in the United States, which is likely also to increase prices. So prices are likely to go up regardless if jobs are likely to increase or not. And so the macroeconomic growth outlook is much worse. Already in the first quarter, we saw decreasing GDP, but that was more of an inventory reason, not because of decreasing growth of the U.S. economy. In the second, third, and fourth quarter, we are likely to see the actual impacts on jobs and growth in the United States. And so as people face tighter budgets, they're likely not to spend as much money on discretionary items, including the type of items you find at the stores that TJX Companies has. I mentioned the tariffs, and that's a huge opportunity and challenge for TJX Companies. In the near term, in the next month or two, it could create an opportunity because the company's inventories are likely more valuable now because new inventory is going to be constrained. Enterprises are not going to order as much production from their vendors overseas because the higher cost of goods to import. And so existing inventory is likely more valuable. That's the opportunity. The challenge is those decreasing orders from vendors are likely to lead to fewer inventory opportunities for the companies in the future because of the decreasing orders, right? And so near term, it's an opportunity. Longer term, it's a risk. If these tariffs get resolved within the next 3 to 5 months, then all is good for TJX Companies. But if there's a persistent higher cost of goods of importing, that's going to be a challenge for TJX Companies longer term. All right, so now that we looked at the risks, let's take a look at valuation. And what you're looking at here is my proprietary discounted cash flow valuation model that I created. And in this video, I'm going to focus on the outcome of this analysis. If you want a more detailed breakdown of these discounted cash flow valuations and where all the numbers are coming from and the inputs utilized, you can join my channel as a member where you have dozens and dozens of videos detailing these breakdowns. At less than $5 a month, I think it's a great deal. So in this video, the outcome is my intrinsic value calculation. What I feel this business is worth today is $69.46. Now, the current market price is $129.42. So according to my discounted cash flow, this business looks overvalued. And that shouldn't be too surprising because it's trading near its 52-week high. The 52-week high for this business is $131. So at 129, you're paying almost the highest price in the last year for this business. Now, I also like to look at valuation on a forward price to earnings basis. And right now, I'm using finchat.io, which there's a link in the description with a discount if you're interested. The forward price to earnings is 28.8 right now for TJX Companies, also near the highest it's been going all the way back to January of 2024. So this business is trading at near peak valuations. And I'm not sure if it deserves these valuations given the current macroeconomic environment. Longer term, when I looked at TJX Companies' profitability ratios, the return on invested capital is solid, not great, used to be great. Right now, it's just solid at 20.6%, up from around 17.8% a couple of years ago. So it is improving and it is solid. Also, if you think about the business pre-pandemic, they were generating returns on invested capital around 40%, which is the norm in this industry. If you look at Ross stores, they also have a similar breakdown of before and after the pandemic. Before the pandemic, they were well above 40%. Now, after the pandemic, they're in the 20% range. So TJX Companies around Ross stores, not as good as Ross stores. And similarly with the operating margin, 11.2% improving from 9.8%. Again, good numbers, not great. I like that the trend line is improving. But overall, looking at the business, looking at the margins and the risks, and then comparing it with the valuation, I don't think TJX Companies deserves to be trading at these premium near 52-week high valuations. And so to answer the question, do I think this stock is a buy, hold, or a sell right now near the 52-week high? I have the stock rated as a hold. I think you can get a better entry point. I think it deserves to be added to the wait list or watch list and wait for a better opportunity to buy this business at a lower price. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.